Good evening. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Monday, the 6th of May, 2024. All right, my friends, as we look at the market, don't be misled by the early news that Israel refused a Hamas deal and then its war cabinet just suddenly said, let's go in and obliterate. That isn't the facts at all, according to the Wall Street Journal, not me. I don't have the reporters. But this afternoon, the Journal came out with a pretty complete report. What Hamas did is they took what Israel had agreed to and modified it on their own. They said, simply put, that Israel will first have a full pullout. It will cease all military operations, and after a set amount of days of that, then in different phases, Hamas will release different stages of hostages, looking forward to an end of what? Have you ever heard that Israel has agreed in any manner to pull out of Gaza? If you have, you're reading something I know nothing about. As for stopping military operations during a treaty time, yes, as long as they're not attacked. So Gaza, Hamas changed it in Gaza, and they're hoping that it plays on people, that people are stupid, I want to use that with a capital S, to understand that they are playing you, all right? They are buying time, and what Israel's war cabinet said is enough. We'll negotiate, but we're going to attack as we're negotiating. They told 100,000 people to leave. If they don't leave, there's extreme force coming their way. Extreme force is their term for wipeout. So let them go. If Hamas will not leave. They don't care if 20,000 more die. Their goal is the destruction of Israel. Their goal is to run Gaza. Their goal is to never leave. Can't put it any simpler. In Home Depot, there is a gap in the chart. Gaps often get filled. They don't have to be, but they often get filled. You didn't fill this one. You didn't fill this one. So breakaway, runaway, you never hit an exhaustion gap. Now on the way here, you're starting to play with the gaps. Generally, you pull back a little bit. You've got higher lows, higher highs. Therefore, the bull camp is in charge. The support in the market is very close to filling the gap. From 334.66 to 336.83, that is a pretty interesting area, and that's where I think the pros will buy this market with stops under the 329.43 level, looking to come back up here. And if you can eventually come out of this whole sideways action that it's developing, maybe you can get back up here. The problem against Home Depot is interest rates are still relatively high. They are falling. The problem is discretionary spending. We saw Tyson Foods today get hit. We saw Starbucks say that they can't meet the same store sales. Howard Schultz trying to explain to them at Starbucks, you've got to focus on customer experience now, not the selling of the coffee. I don't know if they'll get that. McDonald's, we recently saw having trouble with you go in there and it's no longer, hey, I'm out of here for $6, $7. Now it's $10, okay? Go to Whopper Burger. It's the same thing. So the consumer is squeezed. They are downsizing. They are buying store brands. You've heard all this. So that is also going to face Home Depot. So I'm not convinced it can run in this environment. This is not a pandemic environment, but I do believe that we're not at 5% 10-year notes. We're at the 4.5, 4.7 level, trading in that range. That is friendly for this market to a degree. In eBay, it just is a bad-looking chart. Lower highs, lower lows. You had one shot to come out when I began covering it, and I thought you would go up at that time. That's why I covered it. Now the chart looks just absolutely terrible. In Tesla, should you take out the 176 level, you would have reason to get nervous. It probably means you get back down to 167. On the way up, 195.57 is a lot of resistance, but it would be an exciting number. I mean, we're used to this stock being now recently a lot lower than that, 140, 150, not talking 200. So that would be a pretty interesting part. And frankly, the market's done well, even though he has said, Mr. Musk, that he's stopping the charger division and this. He didn't say he's shutting down his chargers, but he doesn't need more business in it at this point in time, seems to be what he's saying, but you're never quite sure. In FCX, Freeport, sideways action. I think this is building action to go higher to the next level, towards the 60 level before it's all said and done. So I keep watching with interest, wanting to come into that market. Gasoline fund, not ready. So as much as I was bullish up here and wrong, I wasn't wrong in coming out, and it's never recovered. And sometimes the best loss you take is right away and admit you're wrong. Anybody that thinks they always have a winning trade, I guess if the company lasts long enough and does well, it comes back, or the fund. The problem is how much pain do you go through, and I'm not willing to do that. I am not an investor. My strategy is that of a trader. It was interesting because I was reading today how some companies, be it from Goldman on, are you swing trading? Are you day trading? And there is a big difference in the two. I am certainly not a day trader. In XLF, you have a market that's sort of just drifting sideways at the 18-day average. It's the first attempt to get away from it. It's immediately overbought. I would look for resistance 41, 43 in the financial sector. In the industrial sector, it's come alive. It's back from the dead. And it's over the 18-day average of closes. It's instantly overbought. It spent a lot of power to get here, but it's back. And that's important. When we look at the consumer, the equal weighted, I'm going to keep mentioning, we hear he's dead. We hear the consumer's died and gone away. It's not really the case. It's what they're buying, the quantity they're buying, and you can see all you've done here is rallied back to the next level of the resistance, the 100-day and the 18. That's where this battleground is fighting. There isn't a trend as I see it. In the home builders, I told you when you were down here, do not count these guys out. With this big of demand for homes, they're going to be fine. Now, I'm not, there's two elements that are going to do fine. The lower priced homes, because you can get into them. And I'm talking home builders. So, the $500,000 home and under, the $1.5 million home up, where you got a guy that's coming in with all cash. It's the middle of the road guy that's sort of caught right here. And believe me, I read today that people think you're going to go to 10% mortgages. I am not in that camp. To get there, you got to tell me that interest rates are going to just keep climbing, and I don't think that's going to be the case. I think that when you get into areas that get high, you always look for higher. When you get to an area that's low, you always look for lower. You overdo it at both stretches. Now, if this economy, the one thing that scares me in that statement is the amount of U.S. debt. It is chewing away at everything we have. That is a big problem. If we didn't have that kind of debt, I'd be so much more comfortable in America saying, I think we're in better straits right now. I'm not saying that. On the energy market, again, now you're playing what happens with the Mideast tensions. So be careful. It will play something here, but these guys that you're looking at are the biggest companies in this particular market. They're the refiners, they're the big drillers. It's everything through there. In GLD, we keep hearing China, that they keep buying. And now the Mideast tension, I don't want to be short anymore. And you ran the Bollinger Band for 4 days and you couldn't go anywhere. It's time to walk away from shorts, and that's what this work did today. The market's now got a higher high and lower low and oversold territory. Silver did the same thing and now gave you the pop, okay? I am not saying these have thrown out big buy signals. I am saying they have thrown out signals where you can't be short anymore. Big difference. Copper, I'm still very much in the bull camp in this market, still with the higher highs, higher lows. I think it's base building here to go even higher. So you can see I'm sticking my neck out there. TLT, BND, well, you're getting nice rallies into resistance here. What happens when they rally? It means rates are falling. And that's what you're getting. In the dollar, you're now down to the 200-day average in the Bollinger Band. I think shorts are covering. And on the euro, you're up to the Bollinger Band. I think longs are covering up here. You're going to have June 6th, you're going to hear from the European Central Bank. Right now, with the data that we have, it certainly looks like a cut is appropriate. So I talk about this and a heck of a lot more each morning, whether you trade futures, stocks, spiders, or ETFs, in my morning videos. I record one at 6 a.m. for the futures, the other at 9. I talk fundamental and technical analysis. That page you just saw is what the website looks like. The charts look like this. They're jet black. They've got the different studies, more studies than you see here. And I teach you how to use those studies, and we dissect charts. We look at daily, we look at weekly charts, we put everything together. I do special reports, they're included. Recommendations, entry, exit, profit, and of course, stops or momentum. You lose the momentum, out you go, and I explain all that. IraEpstein.com research is where this is located. Move your cursor up here and away you go. I'm Ira. I'll catch you in the morning.